Every stock we cover runs through the same full scoring system. The output is simple. Is it worth your money, worth watching, or worth avoiding? Data only, no hype. WYFI, WhiteFiber, gets a buy rating today with 84% confidence. That's right, our first buy rating on this channel. Two-sentence thesis. WhiteFiber is a freshly public AI infrastructure play. GPU-optimized data centers, cloud colocation, GPU as a service, riding one of the strongest secular tailwinds in the market right now, with positioning and momentum firmly behind it. But the valuation model says the current price is nearly 6 times what the fundamentals justify. So this is a momentum and technical trade first, not a long-term fundamental buy. And risk management around $16.90 is non-negotiable. Here's the setup. Market structure scores are leaning bullish. Smart money is flagging bullish, and short interest just dropped 26%, meaning shorts are covering, not piling in. That's a meaningful signal. The 60-day forecast is a strong buy with 90% confidence, projecting a 44.7% move from the reference price. All components of our system are pointing green. That's rare. WYFI has a very strong overall rating, but here's the key level you need to know, $16.90. That's the short-term support. The stock is currently above it at $18.01. Wait, let me frame this correctly. Price needs to hold above $16.90 for the bull case to stay intact. If it breaks back below, the near-term structure fails and you're looking at a retest of $14.40. This is a high beta name, beta of 5.17, so levels matter more here than almost any other stock we cover. The valuation model flags a significant disconnect. The DCF estimate comes in around $2.88 versus today's price. That's the market pricing in years of future growth that hasn't been earned yet. The EV targets from our system also cluster near that level, meaning there's no traditional margin of safety here. For WYFI to grow into its valuation and become a real long-term hold, here's the checklist. Gross margin has to recover from negative 52.9%. The unit economics have to prove out as utilization ramps. Revenue growth needs to stay strong as CapEx ramps. More spending only makes sense if revenue follows. EBITDA needs to trend toward positive. The path from minus $3.8 million to break even is the whole story. The cash balance of $114 million needs to hold without dilutive financing while the build-out continues, and institutional accumulation needs to strengthen. Big money is interested but not yet fully committed. The wildcard risk here is the volatility. With a beta of 5.17, this stock can move 10 to 15% in a day on nothing. That's the price of admission on a name like this. Bottom line, WYFI is the highest conviction momentum and positioning buy, not a fundamental buy. The valuation doesn't support the current price. The margins are still negative. The free cash flow burn is real. The trade, hold above $16.90. Target $23.10 as the first stop, $40.50 as the full bull case if AI infrastructure demand keeps accelerating. Stop risk below $14.40. If you're a long-term investor, put this on a watch list and wait for the fundamentals to catch up. If you're a trader, the setup is live right now. Like and subscribe. We run every stock through the same full scoring system. No hype, just the data. See you in the next one.